The number on your screen is $847 million. Not your money. Never your money. You're just the one who has to model it. It's 11:47 at night. The pitch book is due by 6 a.m. You've been awake for 19 hours. Your Bloomberg terminal hums. Your coffee is cold. You think about slide 34, the DCF assumptions your VP flagged as too aggressive. You rebuild the model. You change the discount rate by 50 basis points. The valuation shifts. You flag it. You send the email. You wait. No one responds until morning. This is your life. You are a function, not a person. You produce outputs, decks, models, comps, memos. You do not attend client calls. You do not sit in negotiations. You sit at a desk on the 31st floor of a glass tower in Midtown Manhattan. You rationalize it quickly. Everyone starts here. The work builds the foundation. You are learning. You are also losing sleep, relationships, and 30% of your 20s. Somewhere in the building, some people make $4 million a year. You understand, on a cellular level, that proximity to capital is not an accident. It is earned. You are building that knowledge now, one model at a time. You get promoted. Your title changes. Your hours do not. Your base is 150. Bonus brings you to 250. You start to breathe differently. You are now on client calls. You don't talk. You listen and take notes. You hear the CFO of a $6 billion company ask about debt restructuring options. Your VP walks them through a high-yield bond issuance, even though you know the terms are punishing. You don't say anything. You learn that deals are never just about numbers. They are about relationships, leverage, and timing. Your VP controls all three. You control the model. You start to understand that the deal flow at this bank isn't random. It never was. The trust that moves deals was built 15 years ago, on a trading floor or over a private dinner. You are still outside that circle, but you are watching closely. You close your first deal, a $340 million debt refinancing. Your name is not in the press release. Your MD's name is. You get a $15,000 spot bonus and a handshake. That's it. You tell yourself this is normal. You are almost right. You are 31 years old. You have a VP title and a corner desk. You have 2 analysts reporting to you. You know exactly what their nights look like. You now run deals. Do not support them. You manage the client relationship yourself. You own the middle market mandates, the 500 million recapitalizations, the sale-side engagements. You draft the engagement letter. You negotiate the fee. Your name is on it. Your fee on a 600 million transaction is roughly $6 million. You keep none of it. It hits the P&L of your division. You are still building. You are learning what leverage actually feels like. It is quieter than you expected. You fly to Houston. You fly to Dubai. You fly to Singapore. You eat expensive dinners. What matters in this industry is rarely said in a room full of people. This year, you make one moral compromise. Nothing criminal. A gray zone. You know the acquisition is overpriced. You say nothing. The deal closes. Your bank collects $12 million in fees. 6 months later, the acquisition underperforms. You don't feel guilty. You feel like you understand the rules now. The title on your door says Managing Director. The number in your head is 85 million. You don't model anymore. You call CEOs. Your calendar is a sequence of dinners, board meetings, and private conversations. The CFO of a major utility company takes your call on a Sunday morning. That's what this title means. An infrastructure fund in Abu Dhabi picks up on the second ring. That is what access looks like. You structure a $3.8 billion leveraged buyout. You close it in 90 days. You collect 2% before the ink dries. Then you move on to the next one. You have two relationships you protect above everything else. They are not friendships. These are leverage structures disguised as relationships. You know it, they know it. No one says it. You are close enough to information flow that your instincts are structurally different from everyone else's. It isn't illegal. It is simply asymmetric. You stopped apologizing for that a long time ago. You sleep 6 hours a night. You see your family on weekends when there isn't a deal in closing. You haven't felt nervous about a transaction in 3 years. You aren't sure if that's confidence or numbness. You move on before the debt covenants start creating problems. You always do. You leave the bank. You join a private equity firm managing $12 billion in assets. Your carry will be worth between 40 and 90 million if the fund performs. You stop thinking about salary. You are not advising anymore. You are deploying capital. You take control positions. You sit on 6 boards. You have portfolio companies with 14,000 employees combined. You have never met most of the 14,000 people who work for companies you own. You run a $2.1 billion acquisition of a healthcare services platform, leveraged at 65%. You structure it so the management team absorbs the operational downside. The fund captures the upside. It is legal. It is normal in this industry. The company will cut 800 jobs in 18 months. You are not the one who delivers that news. The CEO does. You run the board call. You use words like right-sizing and operational leverage. Language functions as insulation here. Your fund raises its next vehicle, $17.5 billion, oversubscribed. Your limited partners include sovereign wealth funds, a Canadian pension, and family offices you will never meet. Individual transactions feel small now. You have started thinking about the system itself. You are not a banker anymore. You are not sure what word fits, but you are not going back. Your fund manages $6.3 billion in assets. You trade currencies, sovereign debt, derivatives. You are long the dollar, short the Turkish lira, long Japanese government bonds. The volatility position on Japan you've been building quietly for 8 months. No one outside knows. The Bank of Japan changes its yield curve control policy. Your thesis was correct. In a single week, your fund makes $380 million. You feel nothing. You move to the next position. You have one regulatory investigation in your fund's history. Nothing was found. The process taught you something. The regulators are always looking at what happened. You look at what's about to happen. You now have political access, not because you sought it, because your LPs fund the people who have it. A former Treasury official joins your advisory board. You pay him to frame your macro thesis as policy aligned. You haven't talked to your college roommate in 4 years. Nothing happened. You just moved in different directions. He makes $90,000 a year as a civil engineer. You don't know how to talk to him anymore. This bothers you less than it should. You filed that away a long time ago. You have not lost anything you can name. That is the most precise way to describe what has happened to you. You sit on the board of a $90 billion sovereign wealth fund. You don't run trades. You set allocation mandates. You decide which markets receive capital. When your fund moves, secondary effects ripple across markets before you finish the press release. You are the press release. You have a direct line to 3 finance ministers and 1 central bank governor. As a peer, not a lobbyist. You restructure the fund's emerging market debt exposure. $14.7 billion. Over 18 months. Quietly. You do it in coordination with 2 other funds. No one outside the 3 organizations sees the full picture. When a sovereign signals debt distress, you are positioned, before the rating agency's downgrade. You are not trading on inside information. You are operating at a level of synthesis that produces foresight. You have not used a public ATM in 6 years. You have a security detail when you travel. You do not attend panels. You do not give interviews. You communicate through structured channels, occasional private dinners in Geneva, Singapore, and Riyadh. Nothing is written down afterwards. Your name appears on a Forbes list once. You request, through an intermediary, that it not appear again. Privacy, trust, freedom, human connection. These are not things you lost. They are things you exchanged. No title required. Your name is on a trust. The trust owns a holding company. The holding company owns positions in 17 financial institutions across 9 jurisdictions. Some positions are disclosed. Most are structured through offshore SPVs. You are, technically, a private individual. You have not made a trade yourself in 11 years. You make decisions. 6 people execute them. All 6 have signed NDAs that would survive a medium-sized litigation budget. They do not discuss this role. A central bank in Southeast Asia is about to announce a rate adjustment. You knew 3 weeks ago. Not because anyone told you, because you understand the structure well enough to read it before it speaks. Your carry interests in active funds total approximately $2.4 billion in unrealized value. You have a family. You love them with whatever remains. You have a house on the water. You see them on holidays. You stopped trusting your own preferences a long time ago. You are not happy. You are not unhappy. Those categories dissolved somewhere around level 5. Those categories were replaced by orientation, a permanent read of the environment, a constant positioning of capital against risk. You no longer know what you would do if you stopped, so you don't stop. Somewhere below, a 23-year-old walks through the lobby